This is Organizational Behavior and Design for Bunker Hill Community College, Man 112, Chapter 15, which is on organizational structure. So we've been talking about the organization as a whole. We also have been looking mostly at the way people interact with one another, but the organization and how it's designed has a lot to do with how those people can use their personal skills in interaction and things like team constructs to perform on behalf of the organization. So how the organization is actually created, if it's done correctly, it can really take advantage of some of the synergies that we've been talking about previously. If you have a poor organizational structure and it doesn't allow people to do what is necessary to accomplish their goals, that's just as bad as having people that can't do the work either. People can only do the work if they're in a construct that makes sense and allows them to perform at the level that is needed. We'll go to the slide 3. It states the definition of organizational structure. And basically what we're looking at is a design that will show how everybody's job and all the work that they do are divided up between the people that are performing for the organization. Oftentimes when we talk about structure, it really comes down to the design of how the organization looks. So if you're in a larger organization with multiple people doing different jobs, you may group them according to the work that they're doing. So for example, a large financial firm will have an accounting department, they'll have a human resources department, maybe a marketing department, communications department. Hopefully the structure will be designed in such a way that each of the different departments have a way to access people and information from each of the other groups, because unfortunately for the benefit of the organization, you can actually create a situation where you have units that work together very efficiently because you're grouping people who do the same work together, but sometimes they become isolated. So if you have a good organizational structure, it will allow people from different groups to still be able to have access to get outside that construct. We don't want things like the silos and stovepiping that we were talking about. If you remember in the team section, we had discussed having ambassador duties and spanning boundaries. So when you're designing the organizational structure, having covered all of that information previously, you should be aware that it can be designed in a way to facilitate that type of communication while still getting the benefit of putting people who do all the same type of work together in a common area. The organizational structure is often exemplified or illustrated by the use of what's known as an organizational chart. An organizational chart, if you've ever seen one, it's usually a diagram that lists everybody, or at least the departments. It could be more generic and just have a department structure. So you'd have maybe the CEO or the president at the top, and then it would break it down into the different departments and then maybe even subunits within there. A larger version of it would actually break it down by individual units. So if you have the accounting department, it would then also list all the staff and what they're supposed to do. It also shows the reporting structure and the chain of command. So if you are an entry-level person and you're looking at the organizational chart, you're probably going to be somewhere down at the bottom. And you would report to a supervisor who reports to a unit director, who then reports to a manager, who then reports to somebody else. So it basically is the way to design everything and map it out so that everybody has an idea of where they fit within the organization. The senior managers who create this document should also just not put it together willy-nilly. They should come up with a concept, like we were talking about before, to strategize, looking at the mission of the organization, looking at our objectives, what we have to do, and then you create that structure based on how that needs to be so that you can get the work done that you need to get done. We're going to go through a few other slides here that will help give some examples of how to do this. So on the next slide, we're looking at the elements of organizational structure. Usually what you're looking at is there's a few things that we're trying to accomplish. So the left column here, we're talking about organizational structure dimension. The first one is work specialization. So that is, how many things do people do that they have in common that we can group them together? So again, if you have an accountant, if you have a bookkeeper, if you have multiple people who do that, you would be able to break it down. You can't have one person do all the work for an entire company. People do specialize because you're better at things when you only have to do a handful of things. Contrary, or the downside of that is if you over-specialize, then people tend to get bored with their jobs. So even when you're breaking it down by job to job, you have to make sure that everybody has as little work as possible so that they become good at it. It's always easier to learn a handful of things instead of a mountain of things. But it's also important to make sure that they have enough responsibility so that they can take on new jobs if they need to based on the demands of the business. And they can be grouped together with other people who do the same type of work. Usually, if you have an accountant team, maybe you have a dozen people who do accounting work in your organization, let's say. Because they're all doing the same type of work, they can all be included in the same part of the organizational structure, but each job will be broken down because there are different types of auditors. There are financial auditors. There will be people who audit internally to make sure the company is doing everything that it's supposed to be doing. You could have people who do accounting that deals with money coming in, revenue, expenses going out, people who handle taxes. All of that could fall within the accounting department, but each job has to be broken down even further. You can't just have accounting and then assume everything's going to get done. Management will break down each job within that particular unit. That's an example of what work specialization is. The chain of command I already referenced. When you look at the organizational structure, when you design the chart, the chain of command is basically you have a box at the top and there'll be a line that shows who reports to that box. And then there'll be sub boxes under it. Eventually, you can find every single person in the organization. You should be able to tell who they report to and who has the authority to make decisions for them or has the ability to work with them as well. Span of control. Span is simply a distance. So if you're talking about the span of a bridge, it's from point A to point B. The Mystic Tobin Bridge starts in Boston and ends up in whatever it is, East Boston or Revere or Saugus. The span is the distance between. So when you're talking about span of control, when you look at an organizational chart, there'll be a box for accounting, and let's say you're the accounting manager. How many people you have reporting to you, or how many different divisions or subunits you have reporting to you, that represents your span of control. It is literally the distance on that organizational chart of how many people report to you. If you have a wide span of control, that means you have a lot of people reporting to you because there's going to be multiple boxes that can be drawn, either a dotted line or a direct line to you. If you have a narrow span of control, that means you only have a few people reporting to you. Now, much like the design of teams, the span of control, the optimum amount is probably somewhere between 3, 4, 5, maybe 6 people or 6 units that report to you. When I say units, if you are a manager, you could have what are known as direct reports. So I had a job previously where I was the director of the training unit, which had 3 subunits. Each of those were my direct reports, the people who ran each of those units, and each of them had 3 or 4 people working for them. So I had about 15 people reporting to me. I had 3 direct reports. I had oversight of everybody so I could talk to everybody, but I did not have a direct chain of command. If I wanted to talk to people who reported to one of my direct reports, I would just pass that information through to them. That didn't mean that I couldn't go and talk to all of the employees, but from a management perspective, it's easier to manage 3 people than 15. So I could tell each of the 3 people what I wanted them to have their staff accomplish. When I needed to, I could go down and talk to whoever I needed to, but for the purposes of efficient management, I would only deal with my direct reports. If you have a lot of direct reports, it becomes much more difficult. So it's easier to manage 4 people than it would be to manage 10. One of the things that management classes talk about is to make organizational design flatter rather than tall. And literally, if you look at an organizational chart, a tall chart will have many, many boxes from the top down to the bottom. There could be 5, 10, 15 layers. That's what they mean when they say it's tall. A short organizational structure would be when there's not as many layers of intermediate management. So if you think of the military, for example, you've got a general, they've got colonels, lieutenant colonels, captains, lieutenants, second lieutenants, sergeants, you go all the way down the line. That is a very tall structure. But if we have the different type of an organization where we're trying to be creative and responsive to our customers or to create new products, we may want to give people more opportunity to make decisions of their own. That can be reflected in the organizational structure. So you may have a boss, you may have a handful of managers, and then all the employees. So you only have 3 layers. That means it's a relatively short organizational structure. The thing that you need to be aware of, and the thing that you're going to need to remember for the exam, is that when you have a tall organizational structure, your span of control is usually smaller. or less wide. When you have a tall organizational structure, that means you have a lot of middle management, and you can probably have one manager with 4 people, and each of those 4 people have 4 people reporting to them, and so on. If you want to have a flatter organizational structure, that means you only have a couple of layers of management. That also means that those managers will have more people reporting to them because you've gotten rid of all those extra reporting functions. There's no really right answer as to whether you should be tall or short. The standard for academics when we teach this class is that shorter is better. But again, it really kind of depends on the nature of the job that you're trying to do. The reason that shorter could be better is because you have a quicker turnaround time for making decisions or getting authority to do something. If I'm at the bottom of a very tall structure and I have a good idea and I want to try to implement it, I have to ask my boss. And then my boss has to ask her boss, and then she has to ask his boss, and then has to go all the way up the chain of command. And then I have to get the appropriate authority to make the decision, and then it has to come back down that chain of command. Oftentimes what happens is you'll come up with a good idea, you'll ask your boss will go through the chain of command, and then it'll get lost. And it'll either take a long time or you'll never get an answer. When you have a short organizational structure, you have the ability to get answers a lot quicker because you only have a couple of steps to go through before it can come back down and give you your indication about how you can proceed. That's good, and it does make companies more responsive, and that's why there tends to be a favorability for cutting out the middle layers that you don't necessarily need. What I would like to point out, though, is that you do need some layers, and depending on the nature of your job, you might have to have a taller organization than others. It really depends on the mission and the nature of the organization that you're working for. The other downside or potential downside is if you have a flatter or a shorter organization, you have a lot more stress on your managers because they have a lot more people to be able to control. So your span of control is wider with a flatter organization. Your span of control is narrower or smaller if you have a tall organization. Again, there's no right answer. It's just which one fits. But you have to be aware that if you want to have a quick, responsive organization, you better have really good managers that can deal with the extra work that they'll have to deal with in order to deal with a wider span of control and have more people reporting to them and greater responsibility. The next one on this box here is centralization. This basically refers to how organizations are designed and how decisions are made. If you have a very centralized organization, that means everything goes through like a home office or through a higher level up on the chain of command. All the decisions have to go through one place. That's why it's called centralized. If you are decentralized, that means that all of those decisions can be made where they're actually doing the work. So I could have an organization with 10 different locations throughout the country. If I'm centralized, I'll have a home office, and all the information that is being considered for decisions is going to come through that central office. That may work in some situations, but in other situations, if I've got an office in California and an office in Texas and an office in Florida and Boston and New York, rather than having all of these different places go through one centralized location to get a decision, I could just defer and let them make their own decisions. Whether you are centralized or decentralized, again, that is part of the strategic decisions that need to be made by senior management to make it fit the organization and what you're trying to do. Formalization simply refers to how many rules and procedures you have, how much planning you've done, how much policies and procedures you have written out. I would typically argue that it's a good idea, even if you're a relatively flat organization, a relatively small and simple organization, you should have rules and procedures so that everybody is aware of what is expected of them. We talked about things like equity and fairness. It's hard to have an equitable situation or a scenario where you don't have rules that apply to everybody. So you can have a more formal organization. You can be too formal because if, I have to get a paperclip and I have to sign a form in triplicate to get it because of all of these rules, that doesn't make a lot of sense. But you have to have some level of control, both over people and resources that are outside of your human resources, including money and supplies and things like that. So if you are a formal organization, all organizations should be formal to some degree. But you can be too formal and you can be too informal. Again, it's that Goldilocks rule. You have to get it just right. And that's up to management to be able to figure it out. Centralization on this next slide. This is another one of those quizzes, or they do a survey, 1 through 5. And they basically said, are you a centralized organization or not? If you are very centralized, that first question gets to it. You can't really do much until a supervisor approves. That is indicative of a tall structure with a lot of chain of command that you have to follow. A person who wants to make their own decisions would be quickly discouraged. That would be a more centralized. If you would decentralize, those people would be able to make decisions on their own because their manager has given them the authority to do so. Third one, small matters have to go up the chain of command. I have to ask my boss for everything. So you kind of get the idea. If you have a very centralized, probably more formal, probably tall organizational structure, you have these rigid procedures that you have to follow to be able to get anything done. That may work in certain circumstances. If you're a new pharmaceutical company and you're making a new drug, there's going to be a lot of centralization because there's a lot of legal requirements that you have to go through. You can't just release a drug to the public if it doesn't work and it hasn't been tested. If you're simply talking to a customer on a consumer line, and I've given you the authority to make decisions to be able to make that customer happy, that's better. If you've ever called somewhere, customer service, and you said, hey, I have a problem, can you fix it? And they're like, I have to refer you to my boss, and then they put you on hold. That's not a good experience for a consumer. So if you have that type of a situation, you may want to make sure that you're not completely centralized. Maybe big decisions need to be passed along, but you can give your authority to your employees to make decisions on their own. That, assuming they make good decisions and they've been trained appropriately, that's better for your customers because they can get an answer from the person that they're talking to. The next slide here basically kind of breaks down where the green line is. They're a little bit of a different question. The first part, they give you an average score of 20, so it would have been a high score of 30. And what we're talking about here, the same questions from the previous slide, but these are the test results. On the bottom three questions, it's whether or not you're decentralized. I frequently participate in the decision to adopt new policies and rules. This one comes out pretty low. I guess it could have been about 15 is the maximum score for the last three questions. The average score was somewhere right in the middle. So based on the responses on this slide, it looks like a lot of the organizations that have responded, or the people who work for these organizations, they tend to work for places with centralized management. The reason that companies sometimes are centralized even when they shouldn't be is because supervisors like to have control. If they're on the hook for something, a decision that's being made, they don't want their employees to do something that could reflect badly on the manager. So managers tend to get very cautious and they restrict their employees from doing work on their own. There tends to be a default to be overly centralized. So when I said that there is this trend, we want to be flatter and we want to be more decentralized, it's not so much that that's good for everything. It's just that human nature for managers tends to make them be more structured and more centralized than they probably need to be. That doesn't mean that everybody should be flat, everybody should be decentralized. It just means that some places are more centralized than they should be because the managers are scared that things aren't going to go right. What managers need to do is hire good people and make sure that they're trained appropriately and that you give them the authority to do certain things that are not going to be destructive to the company if a mistake is made. How formal a company is, here's another quiz here. So this could be a high score of 25. Again, it's a little bit more than average. The average score came out as an 18. So the types of questions that you'd be asking yourself as to whether or not you are a formal organization. Do you go through a formal orientation program? And of course, as I said, you should. When you hire people, you want to make sure that they know what they're doing, what is expected of them. You don't want there to be any ambiguity because if they don't know what is expected of them, they won't be able to figure out how to do their job appropriately. So you can't be completely informal. You have to have some structure. Files are kept on employee job performances. That's a totally good idea. All jobs in this company are summarized with a written job description. Again, that is very necessary in most places. There's a company handbook available. There's not so much of that in some places. There may be a handbook, there may not be. I don't think that there's any problem with having it. There are a lot of written policies and procedures in the company. This is the one where it starts to become less important. The first three, definitely, you need to have job descriptions, you need to have orientation. You need to have a company handbook. The problem with number 5 is why you need to have written policies and procedures. You just want to make sure that there aren't so many that they become counterproductive. Like I said, if I have to get a new pen or check out a laptop or get new equipment or have authority to go travel, whatever it is, if those procedures are not designed in a way that makes it easy for me to do my job while still getting whatever kind of oversight is necessary, then those procedures probably need to be simplified. On the other side, if you had no procedures, then you run the risk of having a problem with what's known as internal controls. If you have resources that you're giving to your employees, whether it be pay or bonuses or equipment, or you're signing off for the ability to do something, if you had no formalized structure on that, people would start using things and you have no ability to track it. So again, we're looking at not so much formalization is bad and less formalization is good. Formalization to some degree is necessary, but you've got that Goldilocks principle. You need to do just the right amount that fits the needs for your particular company, and that's what managers have to figure out. On the next slide, organizational structure. They're looking at 5 dimensions that we're going to review, and there's basically 2 types of firms, the mechanistic organizations and organic organizations. A mechanistic, if you think mechanical, like a machine, they are hopefully efficient. The problem with being overly mechanistic is that you may actually become counterproductive and it becomes less efficient. But the idea behind creating a mechanistic organization is that by having a lot of control, you can make sure that people are doing what they're supposed to be doing, and hopefully that will make them more efficient. They tend to be rigid, they tend to be predictable, and they thrive in stable environments. So again, if you have that type of business, if you're a bank that's been around for 100 years, you have to modify your structure as rules change, but it's good to have a lot of oversight, especially if you're dealing with a lot of money. If you have rigid, predictable standards, you're less likely to lose track of someone's money. So that probably makes sense for that type of an organization. However, if you need to have the type of business that is much more flexible, freestyle, you can go out and do things and be creative, you're probably going to want to be more organic. That means you have less rules. You still have some rules, but you're not going to be so over the top that people can't actually perform what they need to be able to do. So an outward focus organization, as I mentioned in that second bullet, this is dealing with customers, dealing with either consumer customers or other business customers. And they tend to thrive in dynamic environments where things change a lot. So if you're in a software company, if you're dealing with technology that changes on a rapidly progressive basis, then you need to make sure that your organization matches the environment that you're in. If you have really rigid rules and you're in an environment that changes all the time, you're always going to have to change those rules or you will fall behind. You probably want to be in an organic type of system where you have a little bit more flexibility so that you can adapt as things change. The next slide kind of overviews the things that you would be looking at. So I'll go through this just very quickly. On the mechanistic side, a lot of work specialization. If you are a manufacturing company and you're using an assembly line, people will be doing a very specific part of that assembly. There you have a very narrow view of tasks that they're supposed to perform. You have a very clear chain of command. You know who your boss is. If you want to do something, you know who to go to ask. You have levels of hierarchical control, and a hierarchy, remember, is basically represented by that organizational chart. It shows where you lie, what level you are in the organization. If you're in management, you'd be in a higher level. If you're an entry-level line worker, you'd be near the bottom. But you would know exactly where it was. You wouldn't necessarily be making decisions without your boss's consent. So this is going to be also more centralized. Information goes through a vertical communication system. And if you think the difference between horizontal, which is flat, and vertical, which is up and down, if you look at that organizational chart and you think that you have a vertical communication structure, that means if you're at the bottom of that chart, you have to talk to the people above you. If you are in a more flat organization, you may have more authority to make decisions, but in a mechanistic structure, we're usually talking about a taller, more formally designed organization. On the other side, you've got the organic organization. So you don't necessarily have as much work specialization. You don't do 3 particular things all day long. Your job may be to fix problems, and the problems can change from day to day. You may need to learn new things as they come. That doesn't fit nicely into a construct where you have a very tight box of duties that you could possibly do. So your employees, because you're in a different type of company and you have a different structure, you're going to let your employees just figure out how to do it a little bit more on their own. And if you have good employees, that's going to be more efficient because they'll be able to respond to the situation quicker. You will have a chain of command. I mean, nothing is just going to be anarchy. There's not going to be any businesses out there that don't at least have some level of structure. The difference here is that in an organic organization, it's going to be less structured, or at least the structure will be in a manner that allows employees to have a little bit more capacity to do things on their own. You decentralize knowledge and expertise. People are encouraged to make their own decisions. You have lateral or horizontal communications. So you're going to have a flatter organization. You're going to have wider spans of control. People are going to have the ability to talk to others a little bit more than they would in a more rigidly structured vertical organization. And we also want our employees to be maybe more jack of all trades types where they can learn how to do different work. Again, it really depends on the nature of the work that you're doing. You may have a business that really kind of requires a mechanistic look. You may have an organization that's going to be more creative and responsive to the environment. You're probably going to want to be more organic. It's up to the managers to decide which route to take. Organizational design really is dependent on, as I just mentioned, the business environment, whatever type of company that you're in, whatever type of work you're doing, and the economy as it happens to be right now. In the present situation with a pandemic and we got people working from home, some of these more organic organizations might have a better strategic advantage because they're able to adapt. That's just kind of the nature of what's going on. When the business environment changes because the competition has changed because of things like a pandemic, for example, this allows you a little bit more creativity. You've also got the company strategy. What kind of company are you? What are you trying to do? What type of technology is available to you? And how big you are. If you own a pizza place at the end of the block and you have 4 people working for you, you probably don't have to spend a huge amount of time making a very detailed, centralized, mechanistic organizational chart. You're the boss, you have like 3 people working for you. You can kind of almost put that on the back of a napkin and make sure that people understand what they're supposed to do. They still need to know what their requirements are, but it can be a lot less formal. If you're a larger organization, some companies have tens of thousands of employees working all over the world. You're going to have some type of structure, whether it's mechanistic or organic. There has to be some level of detail or you'll lose control over the system. So you can have different types of organizational formats. You can have simple structures and you can have bureaucratic structures. Simple structures we'll get to in another slide and give you an example. It's kind of self-explanatory. It means it's pretty straightforward. It's not that big a deal. These are going to be your smaller organizations. When you become a bigger company and you have to implement all of these other standards and the organizational chart and the design of the organization, you're looking at more of a bureaucracy. And if you think of what a bureau is, right, it's basically a wooden structure with a bunch of drawers in it, and you put different things in different drawers, and they serve their own function. You have a sock drawer, you have, the t-shirt drawer, the sweatshirt drawer, whatever. It's the same kind of idea in an organization. You have the accounting drawer, you have the marketing drawer, but a bureaucratic structure tends to be more formal, it tends to be more centralized, and it tends to be a little bit taller on that organizational chart standard. So you would have functional structures, you could have multi-divisional structures. How you decide to break up those structures really could be dependent upon what fits your organization. A functional structure is what I was just talking about. You have a marketing, you have accounting, you have communications, you have research and development. Whatever the type of skills people do by function, their jobs determine how you're going to design your organization. But you could make it according to other ways too. It doesn't have to be according to the work people do. It could be according to the things that they make. So you could have a product structure. Let's say you work for Samsung. Think of all the products Samsung makes. They make washing machines, they make dryers, they make computers, they make telephones, they make really heavy equipment. They make trucks and farming equipment too, I think. Those are very, very different things. So you could have divisions done by your cell phone division, your television division, your computer division. And then within each of those, you would have accountants and marketers and communications and research and development people. So it's just a different way of looking at it. You could also have a geographic structure. So if you're a global company and you've got 20 organizations located in the United States and Brazil and France and Russia and maybe Africa, South America, Asia, it may make sense to organize your business based on where they're located. You could also have a client-based structure. Some people make products that they sell to other businesses. Some people make products that they sell to the government. Some people make products that they sell to the general consumer population. These things can be very different. The things that a private company buys for their employees would be a different product than you would buy at go to Walmart or something, or the government could have different requirements for their materials. So the people doing that work may have very different jobs on the basis of who you're serving. So you could design your organization on the basis of your clients being served as well. So you could go functional by job title, you could go by product, by what they're making, You could go by geography, where they're located, or you could go by client, who it is that you're serving. Again, there's no right answer there. The right answer is the managers being able to pick the right version of your structure to fit the goal and the mission of what your organization is trying to achieve. I'll talk a little bit about matrix structures. They don't typically happen very frequently, and the reason is not because it's not a good idea, it's because it can be very complicated. We'll get to that in another slide. So here's a simple structure. This is basically what would be called a line structure. A small restaurant, you've got the owner, manager, he's got wait staff 1, wait staff 2, you've got a busboy, dishwasher, you've got a couple of cooks. They don't necessarily report to each other. They have to work with each other to coordinate their work, but basically you're the boss. Everybody goes to you. So you've got the boss. This is about as flat of an organizational structure as you will ever get. There's only one layer. All of the employees, and they all report to the boss. Here's a larger structure, and this would be taller if you're looking at a multi-divisional structure because it's not spelled out here on this graphic, but you've got the CEO at the top, and then you've got Vice President of Marketing, Vice President of Finance, Manufacturing, Human Resources, and Information Technology. So this is functional structure. You break up your employees by what they do. Each one of those boxes for marketing, for example, you may have business-to-business marketing, you may have consumer marketing, so there'd be 2 more boxes under that, and then you'd have maybe a couple of subunits, and then you'd have all the employees that work for each unit. So you can see that makes the organizational structure a lot taller, and the span of control would therefore be a little bit smaller. Interestingly enough, even with this functional structure, you can see that the direct reports to the CEO, there's only 5. So the span of control is still manageable, at least in this version. You could also break it down by product structure, so you get the same format. You get the vice president of educational toys, girl toys, boys toys, infant toys, and electronic gaming. All of those products are very different. The employees may have different skill sets, so you group them according to what they do particularly well. The geographic structure, again, it's based on location, so you could have a vice president of operations in North America. You could have a different group in Europe, Asia, Middle East, and Australia. And again, be cognizant of the fact that each of those boxes, North America could be broken down into Eastern United States, Western United States, Canada, Mexico, however it plays out. So the fact that this is developed this way graphically for you to look at doesn't mean that this isn't a really tall structure eventually, because every one of those boxes would break out into other units potentially. You could also have a client-based structure. So again, you get government contracts, consumer contracts, maybe sales that you do only on the internet, and then other large company contracts. So here's the matrix structure, and this is what I was talking about. It can be very efficient if it's managed correctly, but the fact is, if you see all these lines and how they're all interconnected, it makes it very complicated. Sometimes you actually have to have people who are dedicated staff simply to ensure that the matrix structure is managed correctly. It's called a matrix because it's basically a grid, and it's not really horizontal or vertical. You break down on the left-hand column, Vice President for Product A, Product B, Product C, and then on the top, you've got, on the left-hand side, it's by product. On the top, it's by function. So it's manufacturing, research and development, finance and marketing and sales. And then there's intersections of what all of these do. So the Vice President of Product A, they're going to have to figure out how to manufacture those, so they're going to deal with those people on the project team for Product A. And then you have to deal with research and development. Everybody gets to work with everybody else, so there's basically a line between everybody. It can make it much easier for communications, and it can create efficiencies. But when you've got somebody from Product A working for manufacturing and operations or working with them, people who are working in manufacturing and operations also have to deal with all these other products at the same time too. So you have to be very on top of how to manage these relationships so that people don't get overwhelmed and get really confused by competing interests, because everybody's kind of working all at the same grid, and it can be a little bit difficult. So I have seen some places where this works. They're usually much larger organizations, and they have a lot of management capacity to be able to make sure that this works. If you're a small organization, you can probably get the communication benefit of simply being small. You shouldn't have a lot of silos and bridges that can't be crossed if you're a small organization. So you probably don't need a matrix structure. The matrix structure is useful if you're a big organization to ensure that you have access to the resources that you need. So again, it can be very positive, but you have to have a caveat that there's a potential risk that it could get out of control if it's not managed correctly. The next slide just basically talks about what I had already discussed. So you can look at this through the PowerPoint that I posted on Moodle, and just to read through it, I basically already talked over this slide. Same with the next one, based on geographic and client-based organizational structures. And the next slide just covers the matrix structure. So if you read through that when you go through the PowerPoint, that should give you an understanding of how it works. How important is structure? It's very important. It's important to have the right structure for the right business, and then it's important to make sure that that structure is developed appropriately as well. If you have to change the organizational structure because it no longer is relevant to what the company is trying to do, you will have to restructure. And that can be a very long-term and disruptive, confusing thing to do. If you were Blockbuster Video, for example, in the 1980s, you were on top of the world because you were renting videos to people who would show up at your store, and you made a mountain of money. And then the 90s came and you went to DVDs instead of VHS videos. And then the 2000s came when internet started to speed up. What do you do? Well, if you wanted to change, you would have to change the entire structure of your business because people aren't going to be going to your storefronts anymore. You would have to take your money that you're making from renting videos and DVDs and invest it into another function that didn't exist when your company started. Blockbuster is an interesting example because they didn't do that. They weren't able to restructure, they weren't able to adapt, and then they basically went out of business. I think there's only one Blockbuster left. I think it's in Alaska or somewhere, and they only have the name of Blockbuster. There really isn't any corporate structure anymore because it went bankrupt when places like Netflix and other streaming services came up. If you were Blockbuster and you didn't want to become irrelevant and go bankrupt and disappear, what you would have had to have done is restructured your entire organization because your business has changed. You would have had to gone from that original model and built a new capacity to do this online streaming side. And you would have had to have an IT side, and then you would have had to try to figure out how to transfer or translate the skill set of people that you had into a new design. That is probably the most extreme example that I could give, but you could have a company that just has one product that is no longer being made anymore. You're going to have to restructure a little bit. Those employees are either going to have to be retrained, laid off, or transferred to another organizational division within your company. That causes a lot of disruption. People tend to not like a lot of change. Individually, some people love change, some people can't stand it, but typically people are creatures of habit. They like to get up and go to work at the same time. They like to know what's expected of them. When you show up at work on Monday and they say everything's being changed, it can kind of throw people into a little bit of chaos. So if you're going to do restructuring, it's very important. I took an entire class on organizational change. It was a whole semester about how to deal with change and make sure that people can respond to it appropriately. So restructuring can be necessary, but it's not necessarily easy. In terms of the effects of organizational structure on performance and commitment, you have a negative job performance correlation between restructuring. So as I said, it can be very disruptive. The interesting part here that may not be mentioned explicitly either in this chart or maybe in the book is that sometimes restructuring is necessary. So it's like a necessary evil. If you're a Blockbuster and you don't restructure, great, you don't have any disruption, but now you're gone. If you want to adapt and restructure and fix a problem and become more competitive, or even if it's not because the environment changed, you just have a bad structure and you want to get a better one, you have to do it. And it's going to result in a downward negative performance level for a period of time. The upside, though, is that if you do it correctly, you'll have a payoff in the future. It's almost like if you ever have to do a cost-benefit analysis, or if you have to do a break-even analysis. If you've taken other business classes, you may be familiar with those terms. The break-even analysis is you have to invest money in order to get something later that could pay back that money you invested plus more. So that's a return on investment. I'll give you an example. I restructured my mortgage. So in order to get a new mortgage, let's say I had a 5% mortgage on the loan, 5% interest rate. I could now get a 3% interest rate. Well, I'd have to do that, and it's going to cost me money to do it. So it's going to cost maybe $3,000 to $4,000 to do it. that's negative for the short term. But in the long term, I don't have a 5% interest rate anymore. I have a 3% interest rate. I can calculate that break-even point. So maybe in a year, I'll save $3,000 on interest. That pays off the $3,000 that I spent to restructure my debt. But going forward, it's all positive. It's all bonus money because I've got a 30-year mortgage. I get 29 years of saving $3,000 a year. But that first year, I had to give up the $3,000 in order to get to that situation where I could get an advantage. If you do restructuring and it's necessary restructuring and it's well designed and it will have a positive effect going forward, and that's a big if, then it's worth having a little bit of disruption to your job performance, because eventually when people learn how to do the new standards, they do the new structure, their new job requirements, then they'll start performing in a positive fashion. So it's a bit of a trade-off here. The bottom line, though, is restructuring will result in a loss of job performance. There's also a moderate correlation to organizational commitment. People may not be that happy with the organization any longer if their job is completely changed, or if they have to move from one location to another. That could be required from an organizational restructure as well. But again, you need to understand that if you're going to do a restructure, you have to do it if it's necessary, and you have to do it right. You have to make sure that there's going to be a payoff, because there's absolutely going to be a negative consequence for doing it. If you have to do it, do it. But don't be surprised if you don't make as much money the first year or two. If you've done it well, however, it's going to be worth it, because you'll get that break-even point at some point where you'll get more money coming in because you have a better structure in place. That's it for Chapter 15. I'm going to put up another video for Chapter 16 as well. Thanks.